We're coming off of a very strong quarter with revenues up 8% and profit up 20%. So it's been very solid.
Where is the strength coming from in particular?
We have the most attractive product portfolio in company history and very strong demand, being held back by the semiconductor shortages. But through the strong demand, we were still able to increase our revenues. So strong mix, strong net pricing.
Let's talk about the chip shortage. Clearly, this has been a huge constraint and hindrance on your and the auto industry's ability to meet strong demand over the last couple of years. How has the chip shortage evolved since we last spoke?
We have been working with our suppliers last year and this year to step-by-step alleviate this issue. But talking to the major chip makers, it looks like we definitely will have it throughout this year and even into next year. So it has to be a step-by-step process. Many of the wafer fab producers as well as the chip makers are putting in new investments, but it takes some time.
When do you see the chip situation returning to normal?
We can't be for sure now, but it's definitely with us throughout this year and most likely into next year as well. But we're hoping that we will see some easing in 2023.
When it comes to the auto space more broadly, where would you say we are in the auto cycle? You've got supply constraints, as you've just outlined. At the same time, we're hearing from other companies across various industries that there are signs of slowing consumer demand.
As far as Mercedes is concerned, we have not seen that yet. We have to remember that we're coming off of almost 3 years now of, let's say, an artificially reduced supply. So 2020 with COVID, then now 2 years of chip shortages. I still think we have a level of pent-up demand. So at least for now, we're not seeing any weakening for Mercedes.
I know that investors are very keen to understand what pricing is likely to look like for Mercedes-Benz with your new electric vehicle fleet. Do you think you'll be able to get pricing when it comes to your EVs? Because if you don't get pricing, the value proposition doesn't really work as well.
The early signs have been promising. So the vehicles that we have launched recently, they also command healthy contribution margins. But you're right, the variable cost, especially the cost of the battery, puts pressure on the margin. So at the same time, as a company, you have to work on your fixed cost, which we are doing. So going forward, you have to change the equation a little bit. But it is our clear ambition to, in an electric world, be able to have the same robust profitability that we're enjoying in a mainly combustion-based business.